the S&P 500. This is what's going on right now. You can see the last couple of months that we had a pretty major problem. You can see up there that this is showing you 10 years worth, right there, 10 years worth of monthly candles, okay? And they have all kinds of tools to allow you to plot things on the chart, use your own ideas and so on. You can even write your own algorithms and you can connect to their system as long as you talk to their API and have your own tools, do all kinds of things, display information, put annotations, all that wonderful jazz that you're doing in Project 3, okay? So one of the things that we might have done in the past is to say, hey, if I'm using Project 3, I could say, hey, let me click on this guy, that's a valley, okay? And see what gets said along the way as you're moving up, seeing where things retrace and so forth and so on, okay? So they have a tool that allows you to do what I'm asking you to do, which is to draw and see the retracement. And let's take a look at what the picture looks like. In particular, we look at the S&P 500, which is like 500 of the most influential companies that have a certain level of value, so their price times how many outstanding shares there are. And you can see that pretty much the S&P 500 has done quite well. If you had put your money in an index fund, that means a fund that is just an index, it just follows this thing, you would have done quite well from in 2016, where it was at 2,000, you know, what they have here, they have it 2,000, and now it's at 6,000, not bad. But let's take a look, and I'm going to pick right here. They have a tool. This particular tool allows you to see Fibonacci's. As you said, it says, hey, Fibonacci line. And the way it works is I pick that tool and I can go to a valley, okay, such as this particular guy here. And because I'm gonna have to do exactly what we're doing, press down and not let go, I have to explain things first, because once I start, I can't just stop, okay? So we're going to go and say, well, from where we had a low point in the S&P 500, let's go up to where we have a peak. There's another peak here, and see when it went down. You notice how sometimes it goes down, you have a candlestick, and then there's this, like, it's reaching down low. Same thing with over here. We had a big drop, but at some point it was much more of a drop. If you had caught this when it was here, this would have been a huge red candle, but then it comes back and you say, well, why did it stop where it stopped, and so forth. So first I'm going to do this one, and the way it works is as you draw, it shows you the different Fibonacci levels, okay? So I went to the wrong place. By that I mean, I don't have the snap to. Remember I told you you have to snap to that first point? So I'm gonna remove all the Fibonacci lines. I'm going to ask for the Fibonacci again, but this time I wanna make sure that I am right at the low of this guy. So I have this little cursor, and basically I'm like here, and I'm going to go to this point, okay? Now I'm going to let go right at the high, and I'm going to ask you if you see the following. So I started at this low. Where's my high here? I missed the high by just a little bit, okay? But when this thing decided, well, actually I was here looking for the high. Let me make sure it's the high so that you don't say that, you know, I'm cheating you of whatever I'm trying to show you. So I select my Fibonacci, I say remove all of the Fibonacci lines, click on the Fibonacci thing again, start as much as I can fit this thing on the low here, and let me go to the high point over here, and the high point over here is like right there. Okay, hopefully this will show that, and I can also zoom in if I want to. Let me see which, this is zoom in, and to zoom in I can just, well, I zoomed in a little bit too much, so let's go zoom out. Okay, let's see what happens if I say zoom in from this bottom guy to this guy. Okay, much better. Now I'm going to be able to draw this a bit more accurately. So let's take, I'm going to take this, I'm going to tell it to remove all these things. Now I can do something a bit better for you to see. So we start at the lowest point, which actually is this guy right here, and we go to the high point, which is right over here. Okay. This, and then you ask yourself, okay, we move from here to this high, and how far down did we go? You agree that pretty much at the 50% level. Now we went a little bit below that, but we turned around, and in fact, where did we end up closing? Remember, we opened here, and what level, what Fibonacci level would you say? Or maybe you say, no, you never closed on a Fibonacci level. Did we close on a Fibonacci level on that bar? I'm talking about, remember, this bar, we went down, this is a low. We kind of went a little bit below the 50%. Where did that bar close?
61%.
Exactly. Right there. Do you think it's just random that this market, which represents 500 stocks, as it decides to go down and then it closes, okay, then it just happens to just randomly close? Now we can look at this. It says the 61.8% was at 2,507.78. Now let's find out where this guy is, where the close is. I can move to this, okay? And it tells you here, the close was 2,506.85, 2,506.85, and the Fibonacci level is 2,507.78. That's 1 out of 2,000 points. What's 1 out of 2,000? You know, if you look at it in percentages, that's 1/20th%. 500 stocks behaving like this accidentally? I don't think so. Now you could have said, well, what about just before that, when we had, and we can say, hey, let's remove all the stuff we don't need. When we started at the low here, but when we first went to this high, let's see what that looks like, if it looks like anything. So back again, get my Fibonacci, start at the low, move to the high, right there, that first high. Gotta make sure I'm on it. Okay, and what seems to be a support? Okay, now they were hesitating, but basically, if you look at the 76%, now it's not as clean a picture here because it went underneath for a little bit, but every time it then turned back up. So you could see that this whole area seems to be support, where the stock doesn't really want to go below it. And when it did have an excursion below, turned around real quickly, where the buyers say, oh, we went just under a Fibonacci level, let's start buying that stock again. And indeed, if you had bought, you know, under the Fibonacci level, every time it turned back around, you would have made a little bit of a profit. But the one that we saw was really big was the one where we went to this point and then we retraced at the 62% level. Now, let's come and look at what's going on today. Okay, so I'm going to get rid of all the trend line. And so we had just looked at what happened from that point on to this. Yeah, it was this point here. So now we can say, well, what happened later? I mean, later on, so we're talking about 2019, then 2020, we had another one of these drops. Could we have seen something back then? Now, one thing someone could say is, well, if I'm looking at this peak and I want to look at a wave that ends here, you could say I could look at this wave. Do we agree? But someone else could say, hey, I have further distance that I'm looking at. You could say I'm looking from here all the way up to here. So let's just analyze, and that's what your project tree would allow you to do, to say, well, let me look at what happened when I went from this low over here to, I mean, we did already this one, but to this guy, and then let's look at this guy to this guy, and then we can even look at what happened further out here. And then we'll look at what happens now, so that you can see, well, what will this predict about the market. And the beauty about this is that you're making the prediction today, and you can keep an eye on this for the next few months and see if what you learn actually turns out to be what will happen. Anyway, so here we go. Take our Fibonacci tool. I'm gonna go from a low, from that low, and now if I go to this particular guy here, here we are, and we can make this bigger. Hold on, zoom in. So I'm going to zoom from here to here. Here's another case, and you can tell that I didn't do it right, so we're going to go, because these things will work to the penny. It's like they have machines essentially that look at all that. So remove this. Let's go back. So now we can, okay, this guy is low. I want to see what that is. This looks like this is the low, and I'm going to go all the way up to, now we had done this one here, okay, and now we could go, now which one did we do at first? We had done this, and you could tell that this, in fact, now if I do this, then we went to this particular high, so now we can go to the next peak that we have here. Okay, here's the peak, so I want to be right on it, I can, boom, okay. So the market, and I could go a bit further up here, I kind of, that's why I say you want your thing to snap to it. However hard I try to be right on the price, okay? But nevertheless, it's close enough. The market went up to here, and then it decided to go down. How far down did this thing go? Almost to the 23.6% level. And again, because I'm not quite up here, this should really go up a little bit. And this one I have just perfect, so that's good. So just up a little bit. You're basically hitting the 23.6%. The market says, oh, okay, this is a good place to turn around, and it does, goes around and turns around, okay? Also, where did we end up closing? Pretty much close to the 50% level. So once people looking at this said, oh, we're close to the Fibonacci level, time for us maybe to buy, okay, they would have bought at 2,200 just to see it go back and close at about 2,600. So it's like going from 22 to 26, that's 4 times about 5 for the percentage. You're talking about a 20% gain, even though the market is totally crashing at that point in 2020. Okay, now we can do and by the way, we had said, well, what if someone said, instead of looking at it from here to here, so let me go back and zoom back in again. Okay. Instead of going from this point all the way to this, what if I went from this valley to this? Because let's say that's all that my system allows me to do. So I just zoomed in. I'm going to remove all the trend lines for you and say what happened if we go from this valley to this peak. Okey-doke. Fibonacci levels, you grab that, start at the valley, go to the peak, and I don't know what's, in fact, this one went we went down below even the 0%, but when we came back, where did we close? Pretty much at the 23.6% level, okay? So again, another Fibonacci level that help decide on what's going on. Okay, another combination. And in your project too, you should actually be able to find, now, you're not gonna do it on this because you don't have the data for this. But one thing you could have said is, all right, what about if I went, and let's zoom in again for you. If I went over this region, so I can better see it, I take my Fibonacci, let's say I start at way back because I happen to have the data. I start at this valley, and I decide to go to this next peak. Okay. Okay. And you can ask yourself, when did that market, in fact, when the market first started going down, how far down did it go? Right to the 76% Fibonacci level. Okay, it attempted again, hit it again. Here it went below, it came back to close a little bit above it. Notice how that level has significance in the sense that, for instance, here it opened right on it. Here when it went up, it closed right about it. Okay, so this, that, and finally, if you say, well, another thing you could say, well, I can't see that far back, or I don't want to use all that data from way back then because way back then the market was a little different. So instead, I'm going to look at the nearest really good valley, which is here, and I'm gonna go from here to that peak and see what that would have said. So first of all, let's make sure that we zoom in between these two places. Now we have a clearer view. Let's take our Fibonacci levels and say, okay, we had a really good valley over here. We had a nice straight run all the way up to here. Okay, so here we go, right there. And you say, and yeah, I'm a little bit off and off, but okay, so going from this valley to this peak, here are my different Fibonacci levels. Where did I come all the way down before turning around? Right there at the 50% level. And if I want to see how close did I get, I can get right on that candlestick. The low of that candlestick is 3491.58. This level is 3507.15. So 3491 to 3507, that's 9 plus 7, that's 15 out of 3500. Yes?
Why doesn't the open of a candlestick match exactly as the close the previous candlestick?
Okay, good question. Why is it that when you open today, you don't match exactly? Because overnight, there are things that happen, okay? For instance, like the news right now, and people say, oh my God, you know, the market is dying, I need to sell. But the market is not open yet, but you can still place orders, okay? It's almost as if you went to Publix, you're the manager at Publix, the store is not open yet. But people heard that the price of eggs is gonna go through the roof. So you get to your door to, you know, you open at 8, but you're there at 7 in the morning, and see there's already a bunch of people waiting outside because they want to rush in to buy the eggs. When people see that, it's called the futures, they say, oh crap, the price already goes up. If, you know, it's like, oh, there's all these people who want to buy my egg. I'm not opening until an hour from now. The price of egg goes up, even though nobody's traded yet, but they know the demand because people are placing orders. The equivalent of all these people at the door waiting for the door to open are people placing orders even though the market is not open yet. And so you could have closed yesterday at $100, something really bad is happening, people hear about it, they're already placing orders, I want to sell. When you open the next day, instead of being at $100 where you close, you find that you're already at $50. When things like this happen, it's horrible, I mean, for the people who have a lot of money in this thing. So nevertheless, here, you start right here, okay? You go all the way up to here, I'm a little bit up, and then you find that, oh, look at that, and I'm a little bit up here. I want to see if and again, that's why I really would want to be able to have you snap to the price, okay? If I really want to try to be as precise as I can be. Okay, I believe I am on this. And then over here for that high peak, I want to make sure that I'm right on it. Nah, I'm a little bit below it. I really want to show you that this is actually done with algorithm because the numbers turn out so often to be like right on the dot or so very close. You say, how does that happen? Okay, so we have this thing here. Okay, and one way I can do it, I'm gonna do this because it doesn't matter where I am here, as long as I have the price correct, I'm gonna let go. So now we can really tell that I am, as far as I can tell, I'm right on the low of the valley. You will make it snap to that, so you'll be exact. And over there, I managed to hit this perfectly well. And you come down, and now you can see you're even closer to that 50%. And again, if I look at this guy, its value, the low is 3491. You can see it here. The low is 3491.58, and the 50% is 3503.36. Okay, so here we are a bit less than 9. This is 842. 8 and 42 plus 336, we're talking about 12 points out of 3,500. Okay, 12 out of 36 would have been 1/3, but this is 1/3 out of 3,000. I mean, you're on it. Okay, and remember, this is an aggregate of 500 companies that together behave that way. It's not random. If it were random or didn't make any sense, people wouldn't be wasting their time on people who trade and so forth to provide them with that tool, among a whole bunch of other tools, okay? There's other tools that you can use. And finally, you say, okay, so we're looking at what happened in the past and seeing that, oh, it kind of matched and everything, okay, wonderful. And then you say, all right, well, what's going on nowadays? Okay. Well, we have two things we can look at. We can say, looking all the way back from the low that we had all the way back in 2016 to what we had in this past December, which is right here. Okay. Oh, I'm not at all on my target here. So, hold on. Okay, so we're going to do this correctly because now we're making prediction about the future. And you can take note of that if you want, because it's the kind of thing where you can go back in a couple of weeks and see, did it really happen? So Fibonacci, start at the low over here. Oh, I missed it. I had I must have let go, because I don't have a mouse, I have one of those little touch pads, and that makes it a bit more difficult. So here we are, and I'm going to go up until I hit that high right there, okay? You can look at that, and you can see how when we came down, we went below that 76%, and you might say, well, this didn't really hit it that well. Are we on our way down to that particular point, which would be the 4,500 level? Okay, 4476 is what this thing says it would be. But that's by looking really further back. You might want to say to yourself, well, what if I don't look that far back? So again, in your project, what you would be doing is you would say, I'm going to start over here. So let me instead say, let's start from here instead. So I'm going to zoom in all the way. It's not letting me zoom into that. Why not? Zoom in from this guy all the way to this one. Okay, so Fibonacci, start at this particular valley. and then go up until we hit just right, okay? And again, we have not stopped at a Fibonacci level, so we have to ask ourselves, are we going down toward this level? And notice we had 4,600 something before, now it's 4,634. So you might want to be keeping an eye out on this level to see what's going to happen if and when we hit that particular level. And then finally, there was one last picture you could have said you wanted to look at, is instead of starting from here, you say, when was the last nice valley we had? It was right over here. So you can say to yourself, let's go take a look at our Fibonacci levels as we go from this particular low to this particular high right here. And what does that look like in terms of a picture? If you look at the last valley we had, not the previous one in 2020 or an even previous one in 2016, but you say, hey, the last nice clean valley that we had was in 2022, okay? Then you look, you go from here to here, and the first place where it bounced off was at the 76% level, and now it's bouncing off the 50% level. I mean, you can look at these things, and you can even look, like your project 3, what were the confirmations before? Remember, right now we're using what we see to say, hey, what's likely to happen? Well, take note and say, hey, in that course I taught, and this crazy teacher said that, hey, first we had a bounce at around 5,500, which was one of the Fibonacci levels, then we kept going further down, and oh, surprise, surprise, we pretty much bounced off that 50% level, okay, as it can tell you here, which is at 4803, and if you wanted to make sure, you could say, well, 4803, what about this particular guy here? The low is 4835. So 4835, 4803, you're talking about 32 points out of 4,800 points. See what kind of a percentage difference that is. It's nothing, okay? So something is making this happen that way. And then you say to yourself, well, if I don't think that this thing can go much, much lower, you could say I'm going to place a buy, let's say, at this level, which is 44.91, because you say, even if it's going to go further down, well, at least when it hits that, I expect it to bounce off, even if the next day it then crashes down again. So you would say, hey, let me get something here, sell it at the close, even though it might keep flowing down. Also, as I said, in your project 3, if you were to take this guy to this guy, you would show the rectangle, you would show the diagonal, and you would count the confirmation. And you say, okay, what kind of confirmations do you have? I would say, if you want to be really accurate, forget this one, but 1, 2, 3, 4, 5. Do you think this guy turned around and stopped at that level just randomly? No. 5, 6, 7, 8, 9. Do you think this is accidental? 10. Okay, so you basically have 10, and I see that I missed this by just a little bit, so I should have brought this up a bit. And in cases like this, these things are really important. So you would have said, oh, there's 10 confirmations already in this particular case. So I'm going to do one last thing before we start talking design. I'm going to remove these, and I'm going to try to redraw. The thing is, why doesn't this thing allow me? Maybe. Let me check something. Nope, won't allow it, so, okay. So let's take our Fibonacci. See, it allows me to do a little bit cleaner thing here. Now this guy, it says, it's not telling you, so I gotta take this guy over here. Okay, so, let's see. Yeah, now I need to get rid of my cursor. Turn crosshair off, okay, do this. Let's take the last nice dip that we had, which was here. Trying not to miss that because it really, okay, right here. And now I'm going to right on it, okay? And unfortunately, I'm not right on it. I really need to bring this up. And the reason I'm insisting is because it looks like there's a little gap, but I'm pretty certain that if you do your calculation, and you could do the calculation by hand yourself, okay, I'm going to try as much as I can to be right on this guy, okay, right there. Oh yeah, right on it. And now it's a lot easier on the second one because on the second one, I can make sure that my horizontal line is right at the tip, right there. Okay, now, and if one of you wants to come to really check, or one of you people with perfect eyesight, are we right on the